So this is going to be the most interesting trading video you have ever watched or you will ever watch. If you're a beginner, you're in luck, because if you take this concept that I'm going to show you here, I swear you're going to be dangerous. You're going to be the one of the most dangerous traders out there. It's quarter, all that type of shit. You're going to be the most dangerous. So I'm going to backtest this on 24 candlesticks, and when I finish backtesting this for you, I want you to tell me what you think. Okay? I want you to tell me what you think. I'm going to be starting with this candlestick right here. This trading concept requires the 1 hour time frame and the 12-minute time frame. You're going to learn what we need the 12-minute time frame for. So here we start here. So that means we'll be starting on this candle. So when this candle starts, I'm going to start here, right? I'm going to start there. So I've made previous videos on how to use this on a higher time frame, like a weekly time frame, using a daily time frame. But I'm going to show you in this video how to do it on a smaller time frame, scalping. Okay. So right there, you mark with the purple line, and then I take that and then I mark my opening price. I like to do that. So, and then I'm going to also mark the end of this interval. So now this is the map. I've drawn the map right here. I know that I'm going to be trading from here, and I'm going to end trading on this session. And then here I'm going to be starting a new session, going to the next hour. Each hour has got an interval that opens on the opening price, which is represented by this red line right here. So I know that it's going to open here, and I have a bias when I'm going to the lower time frames. I know most of you are going to say you shouldn't have a bias when trading. Well, I do. When I go into the lower time frame, I have a bias, and I'm going to show you how I implement this. So right now this may sound like Greek, but if you watch the video till the end, I swear you understand everything. So it's up to you. You can choose to watch, or you can just choose to go and fuck off and do anything you want to do. I don't care. So now I'm going to go to the 12-minute time frame, right? That's the 12-minute time frame, and here we are, 12-minute time frame. Then we have our first 12-minute candlestick, which is this one, right? Let me see. Properties. This candlestick started at 2 o'clock. Yeah, as a fixed candlestick, and it was an up-closed candle, right? And it ended at 3 o'clock, exactly what I'm talking about. See, an up-closed candle. So we had an up-close candle, and you know, when we get an up-close candle and we have a bias to buy, we would have bought here and placed our stop right there, and then the TP. There's no TP because you would have gotten stopped out. So I know that I was going to enter after this candlestick will be the opening candlestick. It's an up-closed, and I was going to enter on here, and then I know that I was going to get stopped out right there. Okay, no problem. And then I wait, and then we get another up-close candle. I'll enter right there, right? Up-close candle, and then we have our stop loss there, or you can reduce the stop loss using the Fibonacci. I don't care. I don't know. I don't know. So here we are going to be closing there, right? that is going to be the closing price of this candlestick. So that means I was going to risk 1,800 points to gain 4,000 points when I'm getting out of this move. Now, okay, that's it. Now let's go to the next candlestick. Then we're going to do this, and then I'm going to remove that arrow. Then now I mark like that. Now we are on this candlestick right here. Right there. So the previous candle is a bullish candlestick. My bias is still bullish. So now I'm going to the 12 minutes, and yeah. First candle is an up close candle, so you know what that means. I am buying on the next candle, and I put my stop loss. I put my stop loss here, and then we close there. So I am going to be yep, that's a mistake there. So my stop loss will be right there, and then boom, 500 points, risking 210 points. Not bad, right? Not bad. Boom. And then now let's go to the next candlestick. The next candlestick. Then delete that. So which is this one. This is the opening price, and we're going to end trading there. My bias is bullish because the previous candle was bullish. Now I go to the 12-minute time frame. Right. 12-minute time frame, and then the first candle is a bearish candle. Cool. The next candle is an up close candle. Cool. So what do? We buy here, and we'll put our stop loss right there, and we get stopped out. Okay, I get stopped out, no problem. So now we go to the next candlestick. Which is this one. It opened right here, and then this, we'll put it right there. Our bias is still bullish, so our bias is still bullish, right? We're starting here, right? We're starting here, and then this is a down close candle, and here is our entry signal right here. Here is our entry signal, so we're going to enter here. We enter when we see our first up closed candle. So this candle was an up closed candle. If we bought here, we would have gotten stopped out by this candle, and then we got another buy here. So that means we're going to buy here and put our stop loss right there, and there is your winning trade. 100 points for 320 points. So now let's go back to the 1 hour time frame. Remember, that was a winning trade, but it closed as a down closed candle, so which means now our bias has shifted. So for this candlestick, it opened right here, right? That's the opening price. That means for this candlestick, we are going to be looking for a sell signal, because the previous candle offers a sell. So right now I am going to go to the 12-minute time frame, and here's our 12-minute time frame. So the first two candlesticks are bullish. We ain't doing anything here. We're sitting still. The first candlestick is bullish. You sit still. The next one is bullish. You sit still. The next one is a bearish candle. We get our signal. Then we sell. What do? We sell right there. And then taking our profits there. Where is the stop loss? There. There. That's 200 points for 400 points. Right. 200 points for 400 points. And that's a winning trade. So we're cool. Let's go. Our next trade. Where is our next trade? Our next trade is this one. This candlestick. So, which means we're going to be ending here. I like to mark. You don't have to mark where the trade ends, right? You just have to mark where it starts. You have to know where it starts. It starts here, and then the opening price of this candlestick will be right there. And I'm looking for what? I'm looking for a sell. You're only trading on one direction. Which direction are you trading? Are you trading the direction of the previous candle? That's the one that you're supposed to be trading. Okay, that's the one you're trading. So delete that arrow. Let's go back to the 12-minute time frame. Then let's go to that interval. Right? Let's go to this interval. So right here, you see, we've got this up close candle. Up close candle, no signal. We chill. We don't do anything. Next, you got another up close candle. Up close candle, it's a buy signal. We don't do anything. We know that it's a manipulation. Everybody who is buying this is buying poison. We're not buying here. So now we get our down close candle. See, we get our down close candle right here. That's our sell signal. So which means when this candlestick starts to open right there, we are selling that, expecting it to go down, selling the shit out of it, and that's what it offers right there. So doing this with me won't really get you to trust this. You have to do it with yourself so that you can get trust it. So that you can get to trust it, right? Get to trust it. That's another winning trade. You're risking 177 points, and then you got 376 points. So if you have been watching and you have been listening, you can see that you can get an easily 1:2 just using this simple method. Okay, you can just get an easily 1:2. So now that we're done with this one, let's go to our next candlestick. Let's go to the hourly time frame. Yeah. So now I'm going to delete that arrow. So which is the candlestick that we're trading now? We're trading this up close candle. Do this with all candlesticks. Just don't choose only the ones that made it. Okay, even those that didn't work, also use them. They are very important. So this one opened right there, and we know we're looking for our sell signal. So let's go to the lower time frame. Where are we? We got our sell signal on the third candle right there. So we sell here. We put our stop loss right there. Right? And then we get stopped out. Of course, we get stopped out, but eventually the market closes as right there. And now we've got an up close candle, right? And we got stopped out. It's okay, no problem. Let's go and get another trade. Okay, let's go and get another trade. So now we've got an up close candle. But guess what? this up close candle didn't take out that high. This up close candle, it didn't take out that high of this candle. So the bias is still what? The bias is still bearish because the market structure hasn't changed. The bias is still what? The bias is still bearish. So now we are going where? We're going here to this candlestick, right? In this candlestick, we're looking for what? We're looking for a sell. We're looking for a sell. And this candlestick, we know that it opened right there, right? Now, let's go back to what? Don't get lost, okay? Follow what I'm doing. If you don't, just keep watching. You'll understand what I'm trying to show you as you keep watching. Right. We are here, right? What are we looking for? We're looking for our sell signal. Where do you get our sell signal? Here we go. The thing starts there, right? Sorry. So now here we're our up close candle. That's not a buy for us. We don't need that. Here we've got our down close candle, and then so this down close candle, the next candle is a up close candle. So we're going to enter there, but we're going to enter because of this down close candle. So we're going to put the stop loss right there, and then what happens is we get stopped out again. Cool, no problem. Let's go to the next time frame. It's in 1 hour, and our bias is still what? Our bias is still bearish, right? So I'm going to move this down here, and then I know we're going to be ending right there, right? So here is it. So this candlestick is red, so that means we're still bearish, right? The bears are still in the market, so we're still looking for sales. So now we come in here, and then the first candlestick that we get is a large down candle, right? It's a large down candle right here, and we're like, okay, that's a large down candle. So what do? On the next candlestick, we sell. Sell right there, and we put our stop loss there, or we can use our Fibonacci to put our stop loss somewhere right there. Because if I take the Fib tool, right, if this candlestick is too huge for me to put my stop loss up there, I know that I can measure this, and then I will sell there, and then I take this SL, I put it maybe on the equilibrium or right here, because it doesn't have to go there, right? It doesn't have to go there if it's going to go down. And then how many points do we get out of this move? A lot of points, as you can see, a lot of points. But we would have reached 400 points, so we expected to get more out of this move, so we got more. That's still a 1:2, right? That's still a win. The win is a win, right? So now let's go to the next candlestick. The next candlestick, it opened right there. That's the opening price. This candlestick, that's the one that we're talking about. So now it's going to end there. So now here, I'm looking for a sell. I'm still looking for a sell. I'm looking for a sell. I'm bearish as a bull. I'm as bearish as a bear. I'm as bearish as a bear. So here we got our sell signal a little bit late, right? We got our sell signal a little bit late because the first 4 candlesticks were buys, right? First, this one is a buy. Then we got this sell signal right there. If I was you, I wouldn't take that sell signal because it's just too far. Okay, it's just too far. You can take it and hold for the close, but what's the need? What's the need though? I mean, you would have closed around there. No. there's something wrong here. You sell there, and then put your stop loss around there, and then the TP would have closed around maybe there 80 points, but it would have allowed you to get those points. Right, now let's go to the next candlestick. Right, this candlestick. So we had an up close candle, but the market structure hasn't changed. Still, we're still bearish as a bear. Okay, we're still bearish as a bear. So now here, this one opened right here. So it opened right here, right, and I'm still bearish. And I got to the lower time frame. And the first candlestick we see is a bearish candle. So that means we get our sell signal right after this candle. So we sell there. The first candlestick is this one. Yes. The first candlestick is this one. So the next candlestick we sell, right? After selling, we hold. The stop loss is around there. Or it's that candlestick. So that's 200 points. But you can also reduce the stop loss. There are ways to reducing the stop loss. Don't be scared of getting stopped out. You can always get back in. You can always reduce the stop loss. The reason why we go to the 12-minute time frame is to reduce the stop loss. So, right, to reduce the stop loss. Now, as you can see, there's another winning trade. Let's go to the next one. Okay, to the next one. I'm going to show you how to trade like a pro with a bias. Trading with a bias. So now we're on which now? We're on which one now? Now on this trade, right? On this trade now. Yeah, I think on that one. And then this one opened right there. And we're looking for a sell. And now I'm not going to put where it ends. I'm just going to put like that, so that maybe let me just put it so that you understand what I'm doing when I'm in the lower time frames, right? So right there, let's go to the 12-minute time frame. 12-minute time frame. First candlestick right here, it's a big bullish candle. We don't want to see that. The next candlestick is another big bullish candle. We don't care about that. The next candle is a down close candle. That's what we want to see. Now we know that it's about to go down. And now we sell. And then where do we put our stop loss? Right there. And then where do we take our profits? You can take them when the candle closes. That will be a 1-to-1. It's a win. Or you can take them right there. It's all up to you. What do you choose? Okay, what do you choose? It's all up to you. So if I was you, I'll take my profits maybe around 1:2, which will be around there. Okay, I'll just be trailing my stop loss. As the trade moves to my favor, I'm trailing my stop loss. I'm keeping the profits. So now let's go to the next candlestick. Right there. So here you can see the next candlestick is this one, right? It's this one. Yeah. And then it ends there. So this one opened right here. Here's just straight selling, bro. Straight selling. Just selling. If the market structure changes, that's when you can start looking for buys. But as long as the market structure is still going down, you're looking for sales. So you go down like a fat man. And then the first candle is a big bearish candle. So which means this one was going to be another sell right there. And then if we use our fib tool, and our stop loss would have been around there. maybe we get stopped out. It's okay. It's not the only trade that we are going to take. You know that over a long time we're going to take a lot of trades that are going to work. So it gets stopped out. Cool, no problem. Let's go to the next candlestick. Okay, which is this one. That one was a trippy one. Okay, cool. We got out of there. Now we got this candlestick, right? And this one opened right there. Okay. So let's go to the 12-minute time frame. The 12-minute time frame. Why do you use the 12-minute time frame? Because there are 60 candlesticks in a 12-minute interval. That's why. That is why. So here you are going to sell. Where are you selling? You're selling right there. Because the first candle was a down close candle, kind of indecisive but down close candle. So we sell there and it gave us 1,664 points. Don't tell me that ain't real money right there. That's real money right there. Real money right there. You see? It's the way that the strategy is. Sometimes it gives you more, sometimes it gives you less. Depends on how much you want, on how much the market is going to move. Right? So that's another win. I'm going to the next candlestick. So we're back testing that one there. Now we have this one. This is the next candlestick. Start here and ends there. Right. Now I'm going to go to the 12-minute time frame. I'm sure if you have been watching this video long enough, you know the drill. You already know the drill. And you already know the drill. The first candlestick is a down close candle. As a straight sale, man. We do not oppose the market. We go with the market. We go with the flow. We are the followers. And then we close there. And then those are the points that are offered to you. Those are the points that are being offered to you. And then maybe the stop loss will be right there. We never went up. We just continued going lower and lower and lower. And then there's your 200-point move. What do you want? From risking 600 points, or you can just use a fib to reduce that stop loss. If you feel like that stop loss is too huge for you, you can just reduce and put it there. If you get stopped out, you can always go back in. You get stopped out, you can always go back in, okay? You can always go back in and make a lot of money, more than you would have made if you didn't use a short stop loss, okay? So that's that. Now we are going to the next candlestick. I'm not done. I want it to be stuck inside your brain. Until you understand it. Right? Until you understand it. Now, this candlestick, right? What are we looking for? We want to sell. We are the bears. The biggest bear in the market. We want to sell. So right there, we get our sell. I'm sure you can see it without even me showing it to you right now. Like, you sell there. Why do you sell there? Because we got our sell signal. And then you put your stop loss right there. And where is your TP? How many points did you get? 700 points from that one. So 700 points. I don't know. You can hold for more, but I don't recommend that you hold for more, because each hour represents each interval, and each interval has got a trade for you, waiting, seated there just for you to take it. Okay, each hour has got a trade for you, waiting for you to take it. Right. So you get your trade, even though it's an up close candle, you get your trade. Okay, I hope you understand. Now let's go to the next time frame. Now, if you're smart, you know that you don't have to keep on going to the higher time frame. You can just count the candlestick and know where you're supposed to end, where you're supposed to put your things, right? Now, right here, we got an up close candle, but the market structure hasn't changed. So, what are we still doing? We're still selling, right? We are still selling right here. we are still selling, and we are going to be selling this candlestick right there. Let's go to the 12 minute time frame right there. So now the second candlestick, as you can see, sometimes we lose, but that's just the taxman really what coming from for his money. That's just the taxman coming for his money. Doesn't mean that you're going to win all the time, but if you get stopped out and then you get another signal, don't be scared to get in. Okay, just don't be scared to get in, but just don't be taking more than 3 trades on one interval, like on 1 hour interval. If you get 2 trades wrong, just get out. Just know that it's manipulated. You do not want to be in there. Like on this one, don't say I didn't tell you. If you watch this video for this long, now I'm sure you're starting to get the drill. Okay, starting to get the drill. It's the drill. I'm going to drill it into your brain. So you're going to get in there, and then you can see where you're going to get stopped out. Right there, 300 points, no stress. How many points have we taken out of the market? A lot of points. So we're going to get out right there. Right there, we're going to get the fuck out of the market. We don't care, right? So now here we're going to get stopped out. Okay, cool. That's a big upwards candle, and then we don't do shit. But hey, the interval isn't over. Guess what? Here we get another signal. It's a sell, and then what we do? We take that sell. You take that sell. It's like a Thursday sell. You'll understand that when you watch my other videos. And then this one offers us a little bit of our money back. But guess what? We close before the interval starts. Okay, we close before the interval starts. And so if we would have held, that's one of those trades that we're going to make a lot of money on. But that's up to you. That's not up to me. That's up to you. If you'd have held, you'd have made a lot of money. But we close when the interval stops. And guess what? You lost around 300 points, and they haze your 100 points. You got it back. Are you happy? So that means you lost 200 points on the same interval. So you got 100 points back, which means you lost 200 points only. So now we go to the next hourly interval, which is going to be which one? This one, right? And it's opening up right there, right? Let's go to the M12. Right. Don't worry, bear with me, we're about to finish. So the last time, as you can see, the last candle was a down close candle. So this one is it's going to be a stop out, right? Because we're going to enter here and we're going to put our stop loss where we're looking for a sell signal here. Put the stop loss. Then we get stopped out. Okay, cool, no problem. But guess what? We get another trade here, and then we take that trade. We put our stop loss on the 75%, and then guess what? We get 600 points. That's a win, right? A win is a win. A win is a win. So now let's go. I said if you lose more than 2 trades, don't take another trade on each interval. If you lose more than 2 trades, don't take another trade. And close the trade when you're going to a next interval. Don't continue your trades. Okay, now we're going to which time frame? This one. Right there. Let me remove my arrow. Arrow is doing some things, okay? So we're going to be starting there, and it ends there. Now let's go to the 12-minute time frame. 12-minute time frame. The 12-minute time frame. It's a sell. First candlestick is a buy. Cool. Next candlestick is a sell. Then we take the next candlestick after the sell, because we're looking for the signal. Sell. Man, that is going to scare most of you, this one. I recommend that you put your stop losses up there if you're new. Don't be trying to reduce the stop loss, or you can get back when you get stopped out. It's up to you. It all depends on how you feel. Okay, I don't usually like being stopped out. So right here, that's a sell, and you would have closed right there. Got your 1,000 points, and you're risking how much? Risking 438 points, and then you got 1,000 points. If you held on to it, you would have gotten more, a little bit more. But I don't recommend you hold on too much. Don't be clinging to a relationship too much. Okay, that's it. You get your sell, you get out. So now we're going to go to the next one, to the next interval. And we're about to end. I'm going to backtest 24 candlestick with you so that you understand the drill. The drill, I'm going to stick it in your fucking ass. Stick it in. So this one opened right here. And we're going to be looking for what? A sell. We're looking for sales. Nothing more but sales. We're the bears to the Wall Street. And then here, first candlestick, it's a sell. But it's okay. We get stopped out. Right there. See? Get stopped out. And then that's okay. And then we get another sell signal. And then maybe we sell right here on the opening. And then put our stop loss on the 75%. And then it offers us 400 points, and then maybe it closes with our minus. So that's a lot. It's okay. And that's it. I hope you had fun backtesting with me. And if you want to know more about this strategy, I've got it posted on my channel. You can check more of my videos if you like. You can count for yourself what would have happened. Okay, what would have happened. Yeah, but this is the strategy, and that's what you're trying to do. Okay, I hope you have fun with it.